Okay, I told you before that I was going to share my investment plan as I got into a position to buy as a result of this tremendous downturn in the market. I'm going to share with you what I'm doing. And first of all, I want to go into the thought process behind it. I'm not trying to buy the lowest price, the best bargain in the grocery store. The best bargain in the grocery store is a bundle of rotten bananas. I'm not going to buy any rotten bananas. And what I mean by that is companies whose prices have tanked and they don't have a strong balance sheet, that they are tanking because they're on the ropes. They have more debt than they can actually service, and they're having to go out and borrow money or get relief from the government just to pay their debt service. Otherwise, they're going into bankruptcy. I'm not interested in that. I'm not interested in Boeing. I'm not interested in Carnival Cruise Lines. And I'll do a video and I'll show you their balance sheets and show you exactly why I'm not interested in them at some later date. But today, let's talk about what I am interested in. There are some companies that I believe that are going to lead the next technical revolution and that are going to change the way you and I live. And that is the number one priority when I choose a stock, is who is going to change the way I live. I am not looking for something to jump on because they mismanaged and somebody's going to come buy them. Other than Zillow, I do believe they're leading the pack, and I will at some point buy them. I'm not there yet. So what I'm going to share with you is a URL that you can put in, and you'll fill out a form that basically puts you on my mailing list. And my mailing list is set up as an autoresponder, and as soon as you send that, I will immediately automatically send you a copy of my first newsletter. And in that newsletter, I'm going to explain, first of all, some of the things I think you should be doing if you're serious about investing. And those are, I'm going to give you 4 books that I think you should read. And then I'm going to give you a link to those books so that I get paid a commission from Amazon for pointing you in that direction. Now, again, I want to emphasize what I'm looking to do is buy about 5-6 stocks that I think I'm going to have a substantial gain a year from now, after this virus is gone and we're back to business as normal and we're judging the price we're willing to pay for a stock based upon future earnings. We're not there right now. We're bargain hunting and we're trading based on fear. Once that fear's gone, things are going to come back to normal. The other thing I'm doing, and I made this decision just today as I made my first purchase, I don't believe we're at the bottom of this yet, but one of my stocks hit its target price. So I went and bought 25% of what my end holdings target is. So if I wanted 400 shares of it, today I bought 100 shares of it because I believe the market is going to go down and they're going to go below my target price. So that's how I'm approaching this. This is what I think you should be approaching. I gave you the website that I use, and here I'm going to show you the URL on the website that I use for stock charts. And I showed you in my yesterday's video how you can open up their financial statement, and you can see. I looked at Carnival Cruise Lines today. If I remember right, they have something like in the neighborhood of $15 billion worth of debt. They have a positive cash flow, but if you multiply that debt times 5%, which I would say would be their annual debt service, their cash flow doesn't cover it. So this is a company who openly said, I read in the Wall Street Journal, went out and bought another, or borrowed another $3 billion on Friday to cover their operating expenses. Well, their operating expense, I am sure that they have sent every one of their stewards and their service people on the ships back to their foreign countries and aren't paying them. Now they're possibly paying some of their staff, but their big expense right now is debt. This is the same situation at Boeing. Steve Leisman said on Squawk Box this morning, if I remember correctly, they borrowed some $3 billion on Friday and had spent it by Monday. This is a company that is totally on the ropes and will not survive if the federal government doesn't come to their rescue. I am not interested in those companies. What the federal government does to keep them afloat is between them and the federal government. And so what I'm interested in is the people who run smart businesses that don't find themselves currently in a cash and credit crunch and have borrowed money purely to take advantage of opportunities to leverage the growth of their business. That's the way to run a good business, not to just keep borrowing money to service your debt, because eventually that's going to collapse on you. And again, I don't want to get political, but I'm a little bit concerned that our government has basically said, we're going to open the checkbook and we're going to print money and we're going to keep our citizens alive. I'm good with that, but I know who's going to have to pay that back, and that's my grandchildren and my great-grandchildren. I have some trouble with that. I have some trouble that we have companies who behave poorly and put airplanes into the sky, and they drop out of the sky and people get killed, and now we're coming to bail them out. I have a problem with that. I don't want, they're important to our country, but they need to be responsible for what they've done in the past. And I know their CEO is gone, but I know he also got a hell of a severance package, even though he ignored his employees saying that we aren't doing the quality control that we need to do. He didn't go to jail. Okay, that's enough. Here is the URL that you need to go to, and you need to fill in your information, and you will immediately get a Excel spreadsheet that shows the companies I'm going to buy, the percentages of what I'm going to buy, what at that point when I made this their current price was, and what my target price is. And as I'm sharing to you, it won't be saying it on the Excel spreadsheet. I'm probably going to buy 25, once it hits those numbers, 25%, 25%, and 25%, until I hit the 100% that I want to hold. Now, I also recognize, and there's one particular stock in there who's actually up today. It's not falling, and it's because they are becoming a supplier of the goods that people feel they need in panic, and they actually went out and I think it was hired 100,000 new employees to fill the demand that is being drawn on them. These are good companies. These are companies that are going to survive and are going to benefit us in the future. And that's what I think you should be buying. I don't think you should be bottom feeding.